Crypto kiddies, yes, how are you? You're back. A little bit of wet nappies. I've been keeping it quiet. There's not been too much to talk about, and people are getting squeaky and nervous and twitchy. They're running around. You remember these when you were young? A little bit of a Uzi. You got to be a sniper, not Uzi squirter, not this little pippy stuff. Anyway, let's talk about Bitcoin, crypto, what's happening, and why you should actually be relaxed. And not too afraid, apart from the fact that when sentiment is bad, everybody is always afraid, and it's actually usually a good time to be a little bit bullish. Let's have a peek at the Bitcoin chart. So this one you'll know. I want to just highlight a key area, that you're in a key level of significance as ever, and it is always going to be a very key level until we have a significant move up. We identified this one. It is the 47.5, your neckline to your head and shoulder halftime oranges, and you are, guess what, you're churning around at something like that at the moment, and there it runs right through you, and it's absolutely natural for that. By the way, Bitcoin is like that cyclist that's stuck in the middle of the peloton. That was the phrase I used. It's not the front runner right now. It's not the fastest horse at this particular moment. That doesn't mean it isn't going to be and doesn't have the capacity to be. It's just not right now the fastest horse in the game. And I've shown you a couple of techniques how you can know that, and why it could still be a little bit of a laggard, but I think it starts picking up in and around the new year as a guesstimation. Where when I say new, I'm not talking about 1st of January, but in the period of post holidays and January, mid-January, running through to the end, I think we could see a little bit of an uptick. Let's explain to you why we say that. Before we leave here though, let's just highlight all these key critical levels. Yes, 50K. Yes, neckline 47.5K. Very big levels. Yes, the rushed HVF that never happened, didn't get a decent enough third impulse, then it fizzled. See the rising wedge there, and that was a key sell point. And you hit the previous high 64.829 at that point. The first high here when you ran, sub 68, and then you pushed a little bit higher over there, the secondary high, the death of marginally higher highs. And I'm going to be referring to this. So I'm putting these marks on the dollar chart for you now because I'm going to be referring back to them. So they have some significance. The high there was, in the end, on that tallest wick. Let's have a look at him up top in the right there, 68.958. That's on Finex. So under 69, 68.958, but just about 69. And the one just before, I'm going to be highlighting that to you as well, 66.9. See that? The high 66.9. So essentially 67 and 69, these two. And that was 64. Let's write those numbers in so that you don't forget them. Nice and big. 64K, 67, and 69. You're just in and around those levels. Was it 64 and some change? Was it 64 and a half? Maybe it was 64.6. Yeah, it was 64 and a half. Call me a liar for $500. I'm not going to retype it. Okay, so here's what I'm going to now show you about this whole level. Also remember, before I leave again this chart, 42s. Why you got that little windy over here? 42 on the pullback. Absolutely big. Squeezy Japanesey on the 42 to get you breaking back up, and then when you dip wicked over there, another chance. You see that? A dip wick right down to revisit the 42 level. Key levels of significance, 47.5 and 42. We've given them to you before. Okay, let's go and just show you that trick that I showed you last time super quick that you've all stopped doing because you forget. You're not snipers. You're wanting to blat away with your Uzi. You're spending rounds and ammo. You're not aiming. You're not taking your time. And I'm here to help you and remind you to get back on course for 2022. And it's going to be a decent year. I'll tell you why. So let's just divide this quickly. Buy that NASDAQ again, the technique that I showed you. So we'll do NDX because it'll be weighted to the big boys. And the key element that I wanted to show you around this is that we're comparing risk market to risk market. I also want to highlight how the times for leverage and the times for non-leverage. I did a lengthy tweet chain. Go and check it out. I must maybe retweet it out. It's been a while, as to what you should be doing right now. And leverage trading isn't it. Shorting actually isn't it, even though you could tactically have made some money on some down leg right now. I generally don't think it is. Less activity is good. Holding on to the right holds, who's going to be relative strong. If you want to trade that actually cross token, there were some trades. So we've been biasing Ethereum to Bitcoin, for example. We've been biasing Solana. We gave you Solana last time, and it's been shown relative strength up until we all sold off. Then they all came off a bit, but even still, it's showing relative strength in a number of structures. So let's just remind you of this. Here was a point where leverage made sense. Most instances, leverage doesn't make sense. And I'm not talking about it for short-term trading. I'm talking about anything that might be involving holding overnight. The leveraged longs that you were triggering if you had entered there, nice fat crayon to the point, even if you just did it to there, and if you went for the full target that we gave you. And by the way, this target is now in NASDAQ baskets. So you would have bought sub 1 NASDAQ baskets and you would have got out at 3.5. Don't forget the NASDAQ was going up 2. So you did more than 3.5 on a 0.96 entry on there. This was a period for leverage. And even still, you would have been tested a little bit there before we made the new highs. That was at $20,000, by the way. Doesn't look like it up top here, does it? Because the NASDAQ had grown immensely and Bitcoin had come off the boil. This would have been a bit testing, but you would have been so deep in the money. And I'm talking about leverage. I'm talking about, sub 3x. I'm not talking about 100x. I'm talking about 50% more Bitcoin and or 75% more. You have 10 and you take a 17 long position and you sit tight. And that's like a 70% gearing. This is not 100 Bitcoin off your 10. It's not 1,000 Bitcoin off your 10 and then sweating bullets on the pullback. So this was a key chart. And again, it's a reminder. So what are we talking about? This neckline was absolutely perfect with the target here. And I've mentioned this point countless times. And the reason why I keep mentioning it is I want you to get to understand that this is principally almost a better chart than the dollar. And why are we keep talking about it? Because I'm going to show you something new today and I want you to bear it in mind, but I want you to have these all as additional tools. You should be learning something from us here. The game is you follow a channel to grow and learn as well, not just to try ape in and make money on somebody else's idea. It's development, it's personal development. So this is and should be, for me, on balance of probabilities, a macro continuation pattern where this was your first big run. This has been the tricky season, the halftime oranges sell-off. Then the secondary run, this was strong and then it started broadening the minute you crossed the W bottom and made that neckline. So you were strong up and then you went into a broaden. You went into a small broaden and then you set up the bigger broaden. And you have actually done a little bit of a stab down through that right now. We'll drill down in on that a little bit more in a moment. But we're just taking you from what you know and drilling down into more detail. So we always start macro and come back down. So the overall opinion is that this will be your second impulse, possibly lower. That's the first time you're going to hear possibly lower. Remember, this is against tech. So Bitcoin could be flat and tech is slowly rallying. That will see Bitcoin tech hang heavy. It doesn't have to require a further sell-off, but it could. And it could see Bitcoin being the higher beta and coming off. And then you're going to have another weaker push up. And my suggestion is then you'll make some form of structure. And you could even have an axis line over here. By the way, axis, all of these things we talk about that don't sound familiar. We do a full course and program in great detail. There is an entire learning library. You don't know how many hours of high quality, professionally recorded. Better than what you're watching on YouTube. We use, I'm telling you, this item costs closer to €1,000 than it costs to zero in terms of the audio we use. Not to show off. It doesn't mean anything. It's just we take quality of content very highly. Slides are done. The learning process. These are serialized in order from intermediate to advanced and then beginner. You have a beginner if you're new and you can be brought all the way along. Recorded, LearnDash environment. You won't know what LearnDash is. Perfectly designed for courses, for people to watch, all inside our particular custom designed, not some Discord group, not some Slack group where you're white labeling on top of somebody else who's harvesting your data. We are building wealth in reset time. We run our own bespoke platform, and it is a learning environment, a growing environment, as well as trade with us environment. So that is the nature of the game. Anyway, minor rant over there in terms of what we're doing. You can come and join us, or you can book a call to just find out the details. So what you can see is Bitcoin has been underperforming the tech NASDAQ since this point. Now, here's what I'm going to show you, a couple of key points. And that's why I made those mental comments on the Bitcoin dollar. Remember the Bitcoin dollar? In fact, maybe I can flash him back up for you. There he is. See these mental points. There. I'm also going to mark that one. And then I'm going to mark that one and that one. This was your current all-time high, which was a marginally higher on that, which was in of itself an all-time high before you did that one, because it took out the 64. So this was the first time you beat the 64. That's right. Richard didn't want to take the million hex bet with me about Bitcoin, more likely when it was at 29, not seeing 10K, which was 19K away, more likely making a new high, which was the better part of $35,000 away, as opposed to $19,000 away. And he was right not to take that bet, because we made a new high. Now, you may be lower now, but long run, this is probably going to turn into a rising wedge to the upside. We'll come back to that comment, but let's just look at these 5 points here. High there, this point and that point. Now I'm taking you back to the previous chart, which is Bitcoin divided by the NASDAQ, not the bleeding up dollar. And what you'll notice is when I remove those points over there, that actually that first high here was the final high in Bitcoin NASDAQ. The final high here and here were both lower. Remember that? Both lower. You see that? Here they go again. That one, the final one was the high. This was the second high, this was the lowest. What happened on the NASDAQ dividing value? There she goes. That was your highest, lower and lower. The first one was your highest. So that's called a divergence. What that means is some risk was coming out of crypto that wasn't yet coming out of the tech. So that is a divergence. So again, initially you had Bitcoin totally outperforming tech from that point to that final high. Then you got a rising wedge on Bitcoin. Rising wedge. Do it in pink. TG pink for sports fans. Rising wedge. And then it fell. So those rising marginally higher highs were warning you that the enthusiasm and the power was dissipating and people were still a little firmer and more confident on the NASDAQ. So the highest risk, highest beta market, people were retreating from it. It's almost like Inception. You remember the scene, the movie Inception, with the different time zones, the car crashing off over the bridge. And then they would drop a time zone and you would have hours and hours in the lower time zone and only a microsecond of the car falling towards the water would occur. And then you'd drop into an even deeper time zone, but it was ever more risky the further you got out of your base time level. And you had to spend less time in there because lifetimes were going by. You would spend, absolute years in here, and it would only count in minutes on these different levels. So that's like risk. Go too far away, you have to come back out to get into the safety of the typical time framing world. And what happens is risk is like that. When you're at super driving on the risk on, crypto is the core theme. It's best to have been in crypto, and that was the point when you were at the blow off first cup gold nugget when leverage made sense. What you started to get after that was divergence. Divergence against tech. That means a high beta asset class was overperforming more than the highest beta. So people were retreating out of the real depths. They stopped going down into the risk, and they were coming back up a little bit. Things had moved a little bit fast and furious. So that's what happened. So that was your first high, key point there. So let's now show you the secondary high that never made a new high. See that? The first is your highest point. The second is diverging down. What was happening on Bitcoin during that period? Well, let's go and visit it. Bitcoin was higher. So it had made a new high. This was higher. This was the new all-time high after taking that all-time high until that occurred. And then that was your new all-time high. Note the grind line. Yep, and you can wedge squeezy it as well, like that. Boom. So that was divergence as well, because you were going marginally higher on the dollar, which was more about the dollar weakness, but on similar high beta asset categories, you were getting divergence. And that's the divergence that occurred here. That was your high. The first high was your high. You failed to make a new high. It was your warning. Can you see that? So a couple of points of divergence, why you're not using this that I've given you suitably to get the best advantage for yourself out of this. So where are we now? Where are we now? So you've got to understand first before I talk about where we are. Everyone goes, you repeat so much stuff. Your videos are so long. Yeah. In the comments, there's always 10. You could have said that in 3 minutes. Oh, okay. Well, I'm here for people who want to understand. And if you're so smart, then you probably don't need to be watching this anyway. You already know what Bitcoin's doing next. So a little bit of a basing descending grind line that is showing it is skidding into a low, and it's got stages of capitulation, broadening, stage of capitulation, super low. Now that was the one which was 42,000, key level of significance that we gave you on the Bitcoin dollar chart. Now you have it at the round number of 2.7 on the NASDAQ basket. That means one Bitcoin buys you 2 7/10 of a basket of NASDAQ shares, where previously, before First Cup Gold Nuggets, one Bitcoin could not even get you 100% of the right weighting of Apple, Google, Schmoogle, Fang, and all the other pervert sociopaths, social medias, and all the rest of them. So that is the game in terms of this. So what's happening now? Well, we're coming into a period where we're still underperforming tech. So Bitcoin is not your fastest horse right now. In actual fact, in a somewhat fear kind of vibe, talking rates, and we're going to come on to what I'm going to show you next in a minute. This is a new learning. You will see that people aren't so mad about the lowest point of inception or the highest form of risk in that environment. They'd rather own Apple. I'll tell you something. Apple is a better bond than bond markets are a bond. It's less likely to default. It's probably give you real earnings, but what you pay for those earnings is hell of expensive. So, I mean, there's something to be said for those things, even though, as many of you will be crypto specific, you might not appreciate. It ain't disappearing. It isn't going to be gazumped. It can't be hacked and lose all its cash. It's a different game. It's a different realm. So this broadening structure, we were highlighting this basing, ascending grind, and you've spilled through that. Now you might get a return move initially, but my concern for you is that we first go a little lower, even after a return move to this, because we broke it. Now remember, this is a little bit lower on Bitcoin versus the NASDAQ. If the NASDAQ has a good start to the year and is going up, a couple of stinky stoinks doing 1.5% a day or 0.75, and over a week, some of them going up 4 or 5%, Bitcoin can be flat and it will be giving up ground. It doesn't mean it has to spill into an absolute mega capitulation, but it can skid into a lower low. And what typically happens technically is that you often, in situations like this, you often just run those key levels. This is a big test to the low. It's quite possible that at some point, even after a return move up to this basing ascending, you could have a little spill that just takes you through that. And that will see anyone that had a stop there. Well, very few people are looking at this chart specifically, but it's difficult for us to say that the skidding into a low is over. I could see, remember this W that I told you about, W bottom over there, really strong up here, then you went into a bit of a structure there. It's quite possible, wait for it, oh, hold on, it's at a key round number, 2.5 NASDAQ portfolios, boom, bang, on the nose, 1 Bitcoin, gets you 2.5 baskets of it. We could test that, just run it, or just fail to run it, or just come just lower than this as part of what's going on. In other words, tech, when you start putting risk back on, you're coming from the safe time zone with the car crashing over the bridge in Inception, and you drop down a time frame. You have to drop a few levels before you get into that higher, super higher risk again. So things open out in order of risk, in the same way they retract. It's like that telescoping aerial. You pull from the fat parts out, and right at the end you pull the thinnest and most vulnerable bit out at the end. It sits within, and that's when you're ready to use it and you're going for it right the way out. Those other larger ones, they come out first, and then you keep dropping down into it, and that when you push it back in, you push from the thin end back in all the way through. So that it's the last to come out and the first to go back in. In a risk-off environment, Bitcoin will be the last to come back on. It's currently a slower horse than tech. Okay, I'm hoping you're getting that. So there is still scope for it to fall a little bit off and come down here. I don't think it's going to be super capitulative. You've already had a substantial capitulative throw, but this doesn't yet look like safe bottoming structures. Teensy weensy little flag, a sell-off. Did you make that target? Could it be a target that comes from there? Could it mean it goes a little lower? Have you just broken this red line and badger? Let's do it in red if we're going to call it red, and do a return move. Yes, you could. Yes, you could. You could do first back up and then a push back down. So I would guess we're not far from the relative low, but I don't think it's necessarily over. Somewhere like this would make a great structural final low. Bitcoin versus tech. Okay. Then, once that's in, better news, more risk on environment. Better news, more risk on environment. Let's go, that's too much. 2 days. So once that's in, see, it's not a hammer to end all hammers. I think you get a weak rally, but you can still PP a little bit lower. Then the longer term, the bigger time frame is actually very positive. This has got one caveat, that you don't get your Klaus bank hack too early in the year. But if we're to do this, to say short term, there's scope for us to go a little lower, but we're getting close to that bottom. Look, it could be the bottom. I could be wrong and it's done enough. Typically, you get a final capitulation hammer. That was not it. That was part of the big fall because you've not bounced. There's not been much vigor. This is not typical basing out structure. And the fact that you went like this and made a little round and then had a push and made a fresh low. Still a little bit of churn and fear out there. This pointed to a bit of fear. So over there, but once this box is in, the stage that follows this could be very positive. I say very positive, I mean positive. I don't mean very positive. This was very positive. Beautiful little continuation structure. Rest after the second interim, kind of a wedge, and then that. That was very positive. This was good positive. And coming out of here, we called both of these for you, was also good positive. Not exceptional, but good positive. This is exceptional. What you're going to get here is decent. Decent good. Drift up. And more boring. Less exciting, more boring, but also less smackdowns. It's going to smoothen out and calm down. And that's going to leave everybody wondering, is that it? Is that it? Are we going to go down? But this will be mildly uplifting, so sentiment will climb because of Bitcoin will be going up. We'll probably run, as I say, this 3.5 again. Don't forget up top here, you're at almost 5. You're at 4.8, I think. Almost 5 of a NASDAQ basket, Bitcoin. So it's an exceptional level. And the targets were made of the big first cup. This was the big move. So this is a huge wind up. And this will give you a new level of height, risk-wise, on target performance, because you've come all the way down to virtually 2 from almost 5. You're looking at something that's not too far off 3. 2.8 to 3 projection from here. That'll probably take you to 6.5, going towards 7 in terms of NASDAQ baskets. And you are currently trading 2.87. So imagine you go 2.87 to 7. And the NASDAQ is going to be going up as well. Let's finish with that because I've covered this before. Let's bring in the stuff that's new. Okay, so what new are you going to learn from us today? Well, bond markets are interesting. So, and you're going to go, what's he talking about? I don't care about the bond market. It's about crypto that I'm here. Yes, I'm going to show you why it's interesting. We're going to have Bitcoin in the top half. I'm going to take the NASDAQ out. So this is your Bitcoin dollar. Let's just put him in there like that without this. And then we're going to put in the bottom half an interesting observation. In fact, I'm going to change that. It's the 10-year yield. So let's get the 10-year yield in the bottom, and I'm going to pull that through. What I'm going to do is I'm going to change Bitcoin to the futures. Why? I want 5-day Bitcoin to match 5-day Treasury. So these are going to trade the same amount of time. 5 days in a week. I owe you a rant about people talking about futures gaps. It's not a gap if it was trading on some other exchange and they just happen to change. I could have the religion of Francis, and that says Wednesdays you should all kneel down outdoors and say, all hail Francis, and I'll stand like this in a Uzi t-shirt and say, praise be Francis, and we'll all stop, and I'm the owner of the casino and the exchange, and I'll switch it off on All Hail Francis Day, and you, all my followers, will be all hailing, and the market will not trade on that day. But other people who are not Franciscans will not be. Their casinos will remain open, their exchanges will remain open, etc., etc. But on All Francis Day, as the biggest casino owner and the biggest exchange owner, and etc., etc., and I call Wednesday fornication with Francis Day, everybody will stop working and fornicate, and we will have a deeply pleasurable period. It's not a gap when on Tuesday night and then Thursday morning Bitcoin's at a different price. Just because I called All Francis Day doesn't change it. It ain't a gap. Somebody else had it open, people traded it. It's not only then, it is not a gap. A gap is where no volume occurred and all available market positions were open and available. Switching the power off and saying it's a weekend, we don't care, is not a gap. Anyway, rant over. And fantasies as well. There was a nice little fantasy that crept in there. I wonder what's going on. Anyway, the 2-day chart, it must come down to a single day. You can all put down if you would actually like a Wednesday off. I think it was Connie Chung once got leave to make babies. Sounds very much like fornication leave. And I'm thinking, like, isn't it time the whole world had that? So much stress and mental health issues out there. So I'm going to just tidy this one up a little bit. Lots of little lines in there that don't need to be there. So what have we got here? We've got the CME 5-day Bitcoin, because they choose not to be open on a weekend when Bitcoin is open and available and people are happily trading it, because they don't want to work a weekend. So this is the interest rates on the 10-year Treasury note. So when we have fear, risk off, fear, what happens on interest rates? Everybody rushes into T-bills. Yes, that guaranteed loser market that is hopelessly overvalued because the chief Satan, the Feds and the central banks are supporting them by price. In the same way they're probably suppressing metals, they're supporting this. And when they do a whole reset, they'll reset the value of debt and they'll reset the value of debt metals. You suppress in some place and somewhere else something's popping up. You do not cancel. You can suppress an urge here and it manifests somewhere there. Wherever there's pushing up or holding down, somewhere else the balance is thrown out. So my suspicion is that's what will end up happening on, for example, metals versus the debt markets. One is hopelessly overvalued for reasons known by us to be probably manipulation, and the other's probably held down. Don't forget, Bitcoin now has a futures market. You're busy looking at it, Bitcoin CME. However, they need it to inflate so that it can replace the existing financial system. So it's less likely right now to be downside manipulated. It's an alternative to precious metals. So let's just talk about what happened on rates. And again, you get early indicators here. 18th of March, you started to top out on rates. That means there's a bit concern about rates going up. So when rates go up, there's less demand for bonds. So it's an inverse relationship. The capital value of a bond goes down and they have to offer more interest, or the effective interest that is paid goes up to attract fresh money. So when rates started to show a high, there and there, a marginally higher high, 18th of March and the other one just before April began, you were getting a little bit toppy on Bitcoin. And Bitcoin made a slightly lower low there to there, while this was a slightly higher one. By the time Bitcoin had pumped to a final marginally higher high, again, that rising wedge, you can see it, I can draw it. You can argue it got super tight there with another level. And what ended up happening on that Bitcoin high, rates were already turning down and there was a bit more fear. You see that? A divergence there. What happened? Bitcoin played catch up, threw it down. Gap! Oh my God, CME gap. We had to close the gap. Look, we closed the gap. Come on, guys, you got to be kidding me. Anyway, so leave that other comment behind. Look at the throwdown. That suddenly had to catch up for the divergence you experienced into that low. Then you got a little bit of reflation, then a dip back down and a final little bit of reflation. What happened here? You got your right shoulder into that high for the right shoulder. Then it started a downward journey. And in Bitcoin, once you start a downward journey, it feeds on itself, leverage unwinds, broadening, down, grind line, down, and down, down, down. When was the actual first of final low? These two were equivalent. It was here. Bang. Little bit of a rally on Bitcoin. Again, a low. This got oversold. It sold off so badly. Remember, it's a higher beta version than a bond. It's going to move and swing far more wildly. And as a result, you got another localized low on the secondary dip here, but it was already now positively diverging. You see that and that. So the bond rates were equivalent, but this time, because you had such a bad time of it to the downside and you continued to bleed out in this what later became a falling wedge. So we can actually change that. It was first broadening and then it was falling. So we remember calling that. Remember saying, stay long, get long. It's going to break to the upside. This is half time. It's not a bear market. Everybody bear market. What happened? You had a period of up for the bonds, interest rates, setting up its own squeezy to go upside and a move up. So that move up, a little bit churny, up, down, because you were squeezing for a while. Then you had a little bit of a sell-off and a sell-off period here that brought you into that low, and then you got cycling again. And interest rates led. There's the breakout on the interest rates. It leads Bitcoin. You started going up, you still came down once more. But then it kept going up on the rate side. Then you had catch up. Then Bitcoin, strong like a buffalo. Risk back on. Remember, normal markets, the car crashing over the bridge. Nanosecond. Every time the movie went back to it, it barely moved a little bit more and more with the water down below. Inside these lower time frames is your deeper risk, the layers of inception. Yep. Then eventually you start to top out. Here, look at the dates. We've got these are both 5-day weekers. Whoop, there it is. Now you had a little bit of a pullback. There was a warning. It slowed you a little bit, but you squeezed and went higher. Now you're coming down, you go down for a fair level. Where's that low? Finally there. So you had a drift up. Failed to make a new high on the rates, so people are not feeling the risk. Big move by rate standards. Big move by Bitcoin standards. Down, down, down. So when we had this day, this was red for most of the day. It turned into a hammer later. Look what happened. We've been actually quite tight on rates, but there's quite a bit of fear. This is actually a squeezy for upside. What did you get? You got upside today. So some of that fear on Bitcoin started to stop. You stopped going down. This was a nasty sell. In candlestick charts, the probability after a shooting star, an up leg, a shooting star, and a down leg like this is continuation. Instead, you got a doji. First you were continuing and then you weren't. And then this is flat and indifferent, a little bit down. And actually the hammering is still catching up because Bitcoin is lagging. So you are actually higher here than you were there 2 days before, 3 days before, 4 days before, 5 days before. 5 days before you are higher on rates, which is positive because it's risk on. Dump the bonds, we don't get value out of it, take on some risks. 5 days before, Bitcoin is still a little bit lower. 1, 2, 3, 4, 5. You're a little bit lower. So that's why it's hammering and playing catch up, because the rates are moving. So if this continues to go up, now let's do the analysis on the rates. So I'm going to clear the face here. This overall is a macro upside continuation. In short, Bitcoin, in simple English, Bitcoiners should want inflation and bonds to go down and yields to go up. Did you hear what I just said? Now, that goes contrary to everything you're told, because people will tell you Bitcoin does not produce a yield. Yes, DeFi, wrapped Bitcoin, put somewhere, da-da-da-da-da. In terms of electronic gold, in terms of how it's been positioned as that, versus bonds, it doesn't give a yield. Now, why would this be the case? Why would this be the case that we actually want inflation? Because in the perception of inflation is a risk-on environment, and the best risk-on asset when there is a safe risk-on environment is crypto from a fastest horse point of view, not necessarily best from a risk point of view. It's going to be a higher beta, bigger swings, etc., etc. So what we're actually seeing is a continuation pattern for rates to the upside will probably be supportive for Bitcoin getting stronger. But Bitcoin pays no yield because this is a negative yield already. And every time they do a rate hike, or you expect they may do a rate hike, the actual inflation rate has got even further away, and after a rate hike, invariably they leave it alone for an extended period, because it takes time for the effect of that rate hike to break the financial system that's extremely fragile, which is most likely what will happen. Repo markets, who knows, debt markets, junk bonds, whole bunch of stuff going on. So that will then create fear for the financial system, deflation, not good actually for Bitcoin because it's a risk on trade when we go risk off. After there's a banking hack, everything collapses, they print a whole bunch of money, whatever happens, that then creates the risk on environment again. So remember, the true values of these bonds, there's no true price discovery. Only the current moves upside and downside is of relative interest for us. They are kept overvalued on account of monetization and central bankers buying their own debt. And they need to continue doing that. However, rates up, devaluation of the bonds, good news, because you're in a negative inflationary environment. And Bitcoin recognizes that. You still have 10 Bitcoin in your wallet, if that's what you have, a year from now. And in an inflationary world where you have a negative real inflation of 6%, and actually if you take the true inflation of 16 from Shadow Stats, and you're getting a bond yield of around 2.5%, let's say, or 1.5 on a 10-year, it's a locked-in negative yield. So your money is actually being eaten each year. You're on the wrong side of an inverse or negative compound interest equation. So that is why the perception being that rates will stay flat for a while, the market is discounting that. Bitcoin goes up on a risk on environment and rates rising on debt. Yes, that is my hypothesis. You can talk about it as much as you like if you understand that, what we're trying to say, and the correlations for now. That, hey, correlations exist for a while. They don't have to exist forever. Okay, so that's Bitcoin. Now, let's take you to another chart. I'm going to leave, and this is a really good chart. You need to be HVF trained to actually perceive everything that's going on in this chart. But for people that are just casual viewers, here again is your first cup gold nugget period. We're really strong. This is total 3, by the way. I should have said this in the beginning. So this excludes Bitcoin and ETH. We'll talk about Bitcoin versus ETH in a minute. This excludes Bitcoin and ETH, but this is like number 3, 4, 5, all the way down. And the heavyweights are going to be Binance, Token, Solana, etc., etc. You can go and look at coin market cap for yourself. You know them all. There'll be a bit of ADA in there, etc., depending on where they are in the stack. Falling wedge over here. This was halftime first oranges. So everyone, this is where we are today. And everybody is nervous and pissing themselves in their little pants. You are here and panicking little Pippi style. And we are saying to you, hold on. Don't be so afraid. You're going to have a gradual ascent on your side in what is probably a rising wedge. Remember, this is still in dollar terms. So like Bitcoin, that is a rising wedge, but is actually going to break up to the high side. Remember, most people in traditional technical analysis, you need to learn. This is, again, something we teach, which is uniquely ours. Rising wedge, probability downside. That is as basic and as granular as traditional technical analysis gets. And it is so weak because it doesn't take the crypto markets and the dollar devaluation or anything like that into account. As I've already shown, this rising wedge becomes a Hunt volatility funnel or a symmetrical triangle type structure when you divide it by an asset that isn't doing such a bad job of holding value like the dollar. You absolutely get melt-ups out of rising wedges. This is a macro rising wedge, 3 impulse. You'll learn about it, type 3 scenario. Type 3 is the breakout to the upside, contrary to what traditional analysis teaches you that you should be expecting a downside. Does that mean you couldn't get a downside? Hey, they pull a massive bank hack, deflation, fear and loathing, everybody loses gazillions, all your money in your banks get lost. You absolutely can. There are no certainties in this world. Minus a major shock deflationary event, which I actually think has quite a serious chance of occurring, you're likely to be on this trajectory. Maybe if you were lucky and there was a financial hack, that down leg could be it. And it could be all be expressed in there. But that doesn't allow for a cataclysmic loss of all wealth, income, money, etc. So who knows the scale and the size. So people are panicking right now at this point because they've just experienced this. And this is what I say. This is what Raoul did a very good tweet where he stated, Paul Tudor Jones spoke to him, when your trade idea or when your trade or investment time frame matches the time frame of your trade idea. So let me rephrase that. So you should be holding for this event and break to the upside. You should not be intraday wetting the bed about something small that's happening where there's going to be a couple of legs like that. So we had the halftime first oranges. You had the three impulses. This was a clear long. We gave it on Bitcoin and on the alts. You went up, you got pretty high. It had been pretty easy going. You had a sell, just like you had a head and shoulder sell there, by the way. You had a head and shoulder sell. That was the down. That was the end of your first impulse of a three impulse falling wedge. That was your second. You see that little orange grind line, grindy, final capitulation? No, it's the second capitulation of three. There is your third, and you failed to make a new low. That represented marginally lower lows and then a rounding bottom. Hence why we called halftime first oranges on Bitcoin and why we were doing the same for the alt category. This was your best entry long back in after the whole first cup move up and the beginning of the year 2020. Massive entry. Then a smackdown, squeezy, Japanesey. A smaller sell, I've done it in orange in much the same way. You got a half move, which is significant, by the way. This is on time frames, we're on almost a day. This is a significant move, but it's part the way through the move. It's not the first. It's not the initial slam down. This is, again, a mid-tier move at the splitter of the rising wedge, of course. And so it sells off into a low. And then a third sell fails to make a new low. You're literally getting a rounded bottom and falling wedge even in here. You're getting it again. Look at these fractals. They are talking to you. And this is why understanding wedges is almost more important than understanding HVF, because the retail trader is killed by the rising wedge because he gets long at the marginally new high. Boom, he gets long. What does he catch? The washout. Boom, he gets long again over here. He gets a few pips. He catches the washout into the bear slide that we've highlighted there. A broadening three impulses to the downside as opposed to a rising one. This is what's going on. These are perfect structures to kill retail because they don't trade to the level. They chase new highs. Rising wedge. Very flat, lengthy second impulse. And then a final third. Boom. Breaks down. Down. Three impulses of selling. Continuation pattern. Down. And then another down. Failure to make a new low on the third low. Rounding again. Same principles, slightly different in appearance, but same principles. Around you go. Squeezy, Japanesey for upside. You're close to the bottom of the wedge. That's your new green leg. You've had one of them so far, the super move to the upside into half time, which was Bitcoin 64 down to 29. You get it the second over there on your alts, your key alts, the likes of Solana, BNB, etc. You're going into the next one, but the next one is not as strong as this one and not as strong as that one. It's going to be a little flatter and a little shorter because you're in the rising wedge. You're actually making a skewed upwards HVF, but because you're measuring it against a dollar, it ain't happening. Divide this by the tech, NASDAQ, you're going to have symmetrical squeeze to the upside. Can you see this conceptually? It matters what you measure crypto against. And so he preaches, looking for his Wednesday, Fornication Francis Day. Third impulse, a little bit of a down leg will come. There'll be a major selling leg and there'll probably be three structures of intense, but they'll be smaller and less acute than A, halftime first oranges, which killed everybody, washout of leverage. People also got stung on the September sell-off that occurred here, the smackdown there, and then again here, over here, which was the late November sell-off into lows. But allow it to walk up generally. Hodl the right tokens that will overperform into an up leg. Make sure you're pretty defensive here and you'll get an easing. And then I think we go up and up and up, and this is your melt up. Okay, that is total 3. That excludes Bitcoin and Ethereum. Let's have a look at Bitcoin and Ethereum. Why don't we do that? Okay, bring your Uzi. Here we go. FBTC. We've told people countless times, as many times as they care to listen, that this is going to 10%. It's an overperformance for Ethereum against Bitcoin. In the wrong template, so let me put it on the right one because I have drawers on there. Still not the right one. Let's get it right. One more time. So many different drawers. So key point with this Ethereum. And by the way, we drew these red lines long before they happened. We called for a down leg. This is actually, I haven't adjusted this particular one. I haven't been to this particular version. That should be there and that should be there. That's how close we were. I must adjust this. I'm literally didn't come to the one I thought I was coming to. All at the wind up of the 6.4%, which was called from 2.5% inverted macro head and shoulder. Ethereum is eating Bitcoin. Sorry, maxis. Get over it. It's going to happen. You can hate them, but this target, you've had a sustained period now of churn at this target. That was called by us ages ago. We called this squeezy. It's all on YouTube. Long before other people were getting into ETH. I remember as Raul started to get more Ethereum centric, and I mean, it was great to see. And he's on, and he's smart. He's getting with the winning team. But it's not the only winning team, because there's lots wrong with Ethereum. There's things that are outperforming Ethereum too. It depends how far you want to go down the risk spectrum. Remembering that you're the final bit of the aerial, the skinniest and most vulnerable bit, if you keep pulling out the aerial. So first impulse, second impulse, here you go, off you go, and targets will be in and around, should be close to the 10%. There you go, 10%. Continuation pattern. Baroque. It was a little, didn't have much of a down leg. I expected a bit more, but that after making a key level like it has, it would fizzle a little bit. It doesn't surprise me that it's got a little bit of a fizzle on. It's absolutely natural that it's got a little bit of a fizzle on, and so be it. As I say, I prefer a little more risk because I'm not scared of risk. So Ethereum is not my token, but you can do a lot worse than Ethereum in terms of where you think it will go. By the way, it ran that previous high, 8.2% of a Bitcoin. It ran that previous high. And that's why you're easing. But this is a sustained pullback. What are you probably getting here? Lower time frame. Let's take it to the 10-day. 10-day, 1 day instead of 2 days. You're probably getting a revisit to your funnel. Could it fizzle and break? Yeah, it'll tell us. Some form of a falling wedge. You might get a third. You can have a little pop out the bottom, and then you get a bump. And you could indeed actually visit that 7.5. 7.5% of a Bitcoin. Absolutely key level of significance. Absolutely a key level of significance. Why wouldn't you? Why couldn't you? And it can happen, and all the people will go, it's broken and stuffed, and then it'll turn and do that, and then it'll set a new target and bump and run for 10.5. So that's where we are on FBTC. it's going to do better. And actually on this dip period, it's not a bad accumulate. Look for it to run that low just to kill technical traders. Kill technical traders. So throughout this period, when it was making this low point 2, we said bias holding Ethereum rather than Bitcoin. And overall, despite this current performance, it's worked well. But above and beyond that, we spoke about Solana and Binance. So let's have a look at Solana and Binance. Solana and Binance. Let's have a look at Sol beat BNB. Now Sol had a huge run. Now we warned one thing. This is kind of steep. It can come off. But if it holds this red line, this ascending red line, if it holds above that, that will mean that this structure is still in good force. You've got a shot at 0.6 of a Bitcoin. 0.6 of a Bitcoin. By the way, currently 0.36 of a Bitcoin. There's quite a lot of ifs in this because a lot of people have been buying the dips against BTC here. This could in fact do, and we've covered this in other chips, it could still do a low 2 like this and still be, without us being wrong, this entire pattern can extend immensely and you could shed a lot of value. So I'm okay-ish on this one, but there's a lot of possibilities that exist. You could have a BTC dominance period. So BTCD, quick viewing there. Key thing about dominance is that we've just had 3 touches at the same level. Usually you get a little bit of a rally. Bitcoin is going to lose dominance. More tokens are coming out, so it's being measured against more things, and they are competing in different games. The store of value argument versus the entire application realm and universe, the store of value is going to be smaller. So the winners on the total application and universe layer ones, call it, it's not going to, in the same way gold is not going to have the same market cap as all the equities in the world. They're two different things. This bounce, decent. A smaller bounce, some bounce could be expected. So that Sol BTC could break through that level, but then later go to the upside. So I wouldn't get that. It could be postponed or extended. What I want to look at is Ethereum as the benchmark. We've said Ethereum could or may be better. And as I say, could spill FBTC to that 7.5, which would be a dip, which will allow for Bitcoin dominance to have a wee rally, say to 42%, before possibly coming off and selling. So that exists. So let's have a look at Ethereum, Sol, Binance and Ethereum. So Sol to ETH. Now ETH has been a harder taskmaster than Bitcoin, as we've already shown, generally. Yet Sol, when you divide it by Ethereum, it's very well set up for an upside move. It's still in what we call a funnel. It is sitting pretty, and it's at about 4.6%. Very similar to FBTC type numbers, only a little bit earlier in the year. 4.6% Sol, 7.3% on target performance ish. Volume by price, beautifully aligned for the symmetry of this pattern. It looks right. Learn how to do this properly. Or just take it from me. So that's Sol ETH. The other one we had a look at is Binance. So these are coin market cap. Let's pull them up. These are the big guys competing with Ethereum. I've left out Cardano, that's a little bit because it's been an underperformer. We're on record that we see a court case, a positive decision coming for Ripple in a major move. So if we just leave Cardano and Ripple out, this is a stable coin. You've got Solana, a stable coin, and Binance. These are the two we're talking about. We're talking about the next biggest in the loop, 3 and 5. And that's why Ethereum at 2, Binance at 3, Solana at 5, and then 6 and Cardano and is such a big deal. It's about these layer chains. I think only Ripple is trying to be money, transactional money. The others are all trying to be the key chain. So we're looking at the right two tokens because these should be hodl positions, things that you have long term and that occasionally at the right moments you might apply a little bit of leverage when, if you're doing cross crypto analysis, it's giving you a clear signal. So let's have a look at Binance ETH because we spoke of Sol ETH, and I think I've shown this one. I call it the watermelon smile. Binance absolutely killed it and has generally been taking share overall since 2021, this year. I mean, this was a major move. But then Ethereum's been a harsh taskmaster, but I think this is a bottoming, and this looks like a very key level. It looks like a very key level. Beautiful 1.618 run there. And of course we had that gave you the target there. And then you got the falling wedge that broke down. We've spoken of rising wedges breaking up. The corollary of what traditional technical analysis teaches you. Why? Because you've just made an HVF target and you're in progress decay period and you're squeezing to let go. And let go you did, and you hit this number, and very small spikes through the floorboards here. You see that? Basing out, and now potentially a little bit of structure for a recovery. So Binance could be in a recovery. Not necessarily any shooting stars against Ethereum. Again, quite a hard taskmaster. So we've looked at Sol ETH. So let's look at Sol BNB. So I'm going to reduce the aggression I applied those lines with. So this is a very insightful chart, for me anyway. Upside structure. No one would have guessed it. This is log scale. Have a look at that. Overall, this draw so that was your 2, that was your 1, and here was your third impulse. Almost impossible to see on reg scale. Gave you that target. Yep, gave you that target. Unbelievable how good a target that has been, and you should have blow off through it. Let's just put it back on. You can't even see the structure, it's so flat on log scale, so that you can understand the scale of that. You went from 0.12 to 3.6. That was a 3xing in relative value. So what are you doing here? Looks like a flag to me. Looks like gestation and pause at a key level of significance. Again, the legacy target of around 0.36 sols to a Binance. So Binance is 3x of a sol. A sol is 1/3 of a Binance. Just under. I mean, right now it's all the threes. But I mean, the target here was 3.7s, 3.568. There's the purple number. Oh, no, it's the second one, 3.641. Sorry, there's another purple in there. Okay, so this looks like a flag to me, which is continuation pattern, upside continuation pattern, sol to overperform. Binance, Ethereum, and Bitcoin, but not necessarily right away. So what you want to do is match your time horizon to your trade idea. This can still come off a little bit as you saw it do there. So let's just drop the time frame and see what happened in there. You've got a very ascending structure, a very strong candle, You made part of it and then you fizzled back. When Bitcoin sold off, this sold off hard. Very ascending. So actually, that didn't make that target. It was a fail. It was too ascending, a warning. Remember when we were very ascending on Bitcoin? The pattern can extend. So there's going to be lots of failed surges in the eventual, in winning a war, there were many lost battles, if that makes sense. And this is a skirmish that I would describe as didn't quite perform. Because you were squeezing here, and then you had a bit of a move and you fizzled. Why? Bitcoin dumped. So Solana being smaller than Binance and smaller than Ethereum, if Bitcoin dumps, it actually falls further. So not until you get a clean run, will you get that which you expect. A clean run of risk on. And every time there's deflation, your higher risk off trades will ease more. But this is a goodie. Again, you're setting up another grind line, which can lead to either super strong to the upside or a later fizzle. Super strong, again, you saw it here. Too steep, got to relieve the pressure. Starts walking itself out. Done. Got done by that. But nonetheless, I'm going to leave these on because they were still very interesting levels. Even failed patterns tell you something. Okay, so Solana is a good hold without leverage, assuming you have reasonably strong stomach. With leverage, you're going to get shaken out at the key sell-off moments unless you have very good money management and a very strong stomach. If you fear the slightly higher beta of Solana, Binance and Ethereum are great alternatives. That is the key message. The chains are still going to rule. Yes, go chase an AVAX, go chase a mooning token. I mean, for example, people will hate on me in the comments. I'll show them Hex. There's sacrifices going on. Of course, people are sacrificing Hex. But I can tell you technically, whether you like it or not, we said that was a turning point for Hex. From here, it's been inside its overperformance bands. If it bounces here, it's probably going to go potentially all the way to 37 and a half up top there, and then might roll over a little bit. Made a high of just over 50. That was a head and shoulders. That one over there. It's had an unbelievable run. And you can do technical analysis on anything. So we are going up, and that was a great call. You got in at 13, it's traded 34. In a time that Bitcoin was going down, you got in over here. We put it back on log scale. In and around when it first broke at 17.4, you've got a 2x. It traded 35. And it's heading towards this neckline and could go up and just, I would expect maybe a fizzle and resistance here in and around these areas, a legacy draw of some significance there. But during that sacrifice phase, that can happen. Other tokens that are interesting that I'm watching, crypto.com and everything, broke out of its wedge, now back at its inverted head and shoulder. Watch the TA play out. So again, let's just watch it on the 4 hour falling wedge. These guys are sponsoring everything and its dog. Big ass marketing money. UFC, Formula One, mentioned it before. 3 impulses, marginally lower lows, failure to make a new low. How many times you heard me say that today? Inverted head and shoulder, neckline, target made, got skittish, revisit back down, little bit of risk off in this post-Christmas, run up to Christmas period with Bitcoin being a bit offish. Revert back to Bitcoin and the rates, waiting for the yields to go up and being a bit laggy behind it and being a bit laggy to tech. Not the fastest horse right now. In the peloton, hitting the high heels, on Tour de France and slipping back as the peloton stretches somewhere in the middle, not even in the fastest team. Crypto is not the fastest team. I've shown you NASDAQ is stronger relatively, and lagging and a little bit below. But it will be fast again. It will be the fastest again. It's not the fastest now. Hope you're hearing that. So a little bit of a deflate back down. So you broke your falling wedge, but then your return move is quite chunky and you bounce on your neckline. Fancy that, 54 cents. Crow BTC, not so bad because BTC's been a bit off. Still up after breaking the wedge. So maybe not a bad hole. Crypto.com. So a couple of other things. Library tokens we watch because we got the Odyssey channel. And you guys can get these, I think. This is not a technical. This is flat as a pancake technically. No ways around it. But it did have a surge at one point as they did some promotion. But there is a real use case behind this. This is uncensored media. If you value uncensored media and you think it has a future, technically I think you can buy it somewhere in the twos. Slip down and somewhere into the twos and it could be a great steal, but that's a fundamental. Right now technically, is it beautiful? No, it's a buy on the dips, but I like the principle. Okay, so we've done quite a bit here today. ETH DOM we haven't done. ETH DOM has return moved quite a bit. That was the forecast from the break. You can see it. We didn't allow for such a big return move, so we're a little bit too optimistic there, I would argue. We also highlighted the possibility that Ethereum has a super target in it if you get a macro left shoulder and macro head. We've already made the gray one to its target, and we have the ETH DOM wind up. Broke up, coming back. Target for this, 24.49. Does this, if this fails, it fails at 19.15 if it keeps coming down. Then we've got to look at the other chains dominating it, or a period of Bitcoin dominance. So we see quite a reasonable pullback that from this breakout. Let's have a look at it on a smaller time frame, which looks a little bit like the FBTC chart, but actually worse because some of the other chain tokens are stealing some of its love. Some of the other chain tokens are potentially stealing its love. That's why this looks worse than against BTC. Also, that third sell-off just didn't come back properly enough. Yeah. I need to redraw this one because there's a couple of third highs and third lows, but you can see the pullback, quite significant. Okay, Binance DOM. Domination charts, very useful charts. So chains, we're seeing generally going up. That's a complex second impulse in the orange and then a breakout. We see Binance at 5.5, sitting at 3.89. But it's going to have a journey like this, ups and downs. It's not going to be a single shooter, I don't feel. Complexity, lots of, a little bit of a pineapple smile on the inverted, a pineapple frown if you like. So what was the Sol DOM? How does it look? It looks very close to the Sol BTC. Only it's in this instance a rising wedge. So chains, I'm going to vote on chains on that one. Good guys, a lot in here and it's been lengthy. I wanted to just give you guys a proper session. I hope you've learned something. I hope there's some value there in you for you. I want to wish you, thank you so much by the way, massive thank you. It's open this. We have gone through 40,000 on the YouTube channel and that's without adverts. So we do no monetization. You get no adverts on the Crypto Sniper, and we've gone through 40,000. That's yours truly, the channel.
It's very rare.
It is very rare indeed. 40.3k subscribers. So massive thank you for the subs. We appreciate and value. Leave your comments. Of the macro 10 tokens, of course Metaverse is going to be strong. Of course we could be talking about Sand and others. We'll save that for another time. I'm done with, I wanted to get you just to position sensibly in the strongest possible areas and be calm and wait. Remember that total 3 chart that I gave you, the total 3 one that had all the details. You're in the right place and you're wetting the bed right now. Calm down. You might come a little bit down, by the way. I've got the circle there. I'm not wrong if we first drift a little bit off in and make another low there and then we go up, you know, and then it does that. It's not wrong. But I think you're very close to that low. In the same way, Bitcoin could go that little bit lower against the NASDAQ. This could also bleed a little bit lower. But you're in the right vicinity. You want to be in here. This is your box of success, and the total 3 is going to be one of the best charts for you, and the way you're in that is in the likes of Solana, BNB. And I think if you've got a portfolio of those, don't forget you can also stake Solana and do useful things with all of those, and actually get some degree of yield on them. You don't have to be madhouse trading. This up could be quite jerky and a little bit fits and starts and slow and lengthy. There's still a bit of fear out there in terms of the whole market and sentiment. But a massive thank you to all the subs. Let me know what you think about Chain. You can also tell me outside of Chain which are going to be the flyers, Metaverse, your favorite tokens. Give us one share and one puppy lick on the puppy lick button. We appreciate that, and give us a smear amongst your mates. Thank you for the support over the year. We'll catch you then later. If you want to book a call, have a chat about becoming a member of our Sniper community. Very simple to use, nice WhatsApp interface, setups, learning, recorded content. The learning materials on its own is worth the courses. Are worth the money on itself. We'll see you in the new year 2022. I think you're well positioned, but it's not going to be fire and brimstone in your favor. It's not going to be moon shoots, multi-millionairedom in your favor right now. But it's going to be measured and calm, possible little skidding into more lows, a little bit of fear out there, excluding that one macro deflationary possible event where the tightening by your chief Satans in the Fed doesn't go at all well, and the piping of the system starts to break. And at that point, you'll have fear again, and then you'll get reflation. And I think people are getting used to this cycle. And in that, you could get a bit of a correction on the NASDAQ, and then crypto might hold up better. And that will make crypto could go down a little bit, but during that period, maybe the valuations of NASDAQ come more into focus. So you could have a little bit of a pivoting back. We'll see. But I think generally it's in a risk-on environment that crypto is going to overperform. All right. We'll see you till next year. Let me know what you'd most like to see covered in the new year, what your predictions are, where your favorite areas are in Cryptoverse, and we'll see you on the other side. We appreciate the likes and the shares. Book a call on the links below. We will never DM you. It's a community of the voluntary. You have a chat. It costs nothing to chat, and you get in the information. Bye for now, and we'll see you in 2022.